Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Starting on with the markets, we have seen markets coming back very strongly and reclaiming around 17,500 levels now. Though being a truncated week, we have managed to close above 17,500 in yesterday's session, and it's been a very bullish scenario coming onto the right from 15,200 back to the 17,500. And there are various sectors which have lead the rally, being onto the nifty weights. There are some index which are lagging, and in the second leg of rally when markets have reached around 16,800, 16,900, they have come back very strongly. And one such index which I am very bullish is cap goods. Let's look at the first of the constituents of BSE cap good index. So if you look at the screen, it's been led by L&T, which holds around 26-27%, followed by Siemens, which is around 7%. HL, BEL holds around 7.5%, and then followed by ABV, which holds around 6%. So and there are a number of lists over here on your screen, which holds a few weights over here. But if I just look at the charts over here, if I just look at the start with the daily chart on your screen, if you look at right from 2007, this index have been slightly ups and downs. If you look at the majorly since 2016, it has been underperforming and staying around the same levels, where Nifty has gone much higher, Sensex has gone much higher, and this index has been slightly underperforming. And we'll look at the performance of BSE cap goods index against the Sensex in the later part of the video. But if you look at the structure over here, the resistance which was acting at around 2007 highs, 2016 highs, 2018 highs, has finally broke down in 2021. We saw a rally, we saw a retest. If you look at the right extreme arrow over marked, where the Dow uptick arrow is marked, if you look at the breakout, retest has happened and the journey continued on to the bullish side. So it indicates that the resistance which was acting for quite long years is acting as a support now. At the same time, if you look at the lower panel of the MACD, which is moving average convergence divergence, the averages has given a positive crossover, and most importantly, it has given a positive crossover at the integer line, which is the zero line. And the histogram is also trending bullish. So it indicates that the momentum is very stronger on weekly scale, which is a medium to long term charts. The trend is building up on a long side. If I use the top down approach and move on to the daily chart on your screen, look at the structure over here. If you look at these two averages, the blue is the 50 days and red is the or the orange is the 200 days average. So since years 2021 breakout, it was trending in a golden cross. The golden cross is basically when 50, the short term average is trending above the long term average. Between the fall of June and July, it gave a death cross, but it was for a few days, and then again we have seen a bullish momentum coming up into the golden cross again. If you look at this black falling line, it is a trend line which has given a breakout of the resistance line. The lower high, lower low structure has been indicated, and if you look at even if you look at the weekly, there is being bullish breakout. Now over here, if I just look at the daily chart, it's been giving a good upside momentum onto the charts, which indicates that the structure is very bullish, and the higher low structure into the charts. And if you look at the right, yesterday's momentum, which was the Monday, look at the structure where it has given a go right from the 915 open. It went higher and higher, indicating. And if you look at the previous four red bars, we have seen a momentum continuing onto the bullish side, and it indicates that yes, the structure is very bullish, and one should definitely look as a trading per se onto the capital goods index. If I look at the ratio chart on your screen over here, which is cap goods divided by Sensex, to measure the ratio chart are used to measure the performance of one instrument over the other. So if I just look at the capital goods index performance over the Sensex over here, look at the structure over here. Since 2007, if you look at the extreme left on your screen, 2007 chart, since 2007 highs, this index was underperforming against the Sensex. Back into the breakout, if you look at the black arrows, we saw a breakout right in 2022, where 2021 2022 was a retest, and look at the green arrows over here, which is being indicating the higher low structure. So with a breakout right from 2007, which is around 14 years of breakout, and the prices continuing with the bullish momentum, indicates that capital goods index is well placed. Even if you look at the short term, or if you look at the medium term, or if you look at long term, I believe capital good index is a time one should definitely look at. Not only the likes of L&T, like of the Siemens, but if you even look at the ABP, HAL, BL are outperforming on a larger scale. Even if you look at the L&T, which has been seen a goods upside, Siemens has been trending at nearly about 2800 at all time high. And if you are a FPR subscriber, you may know in the last special report we have released, the capex cycle 2.0. You can read that report where we have highlighted how this capex cycle back in 2000, early 2000 to 2007 played, and similarly the structure is developing. So I believe capital goods index is well getting ready from a short to long term per se, and definitely look as an investment avenue. Signing off, Brijesh Bhatia.